So I've dumped close to $10,000 into Bitcoin and the Nasdaq over the past week. And over the rest of the year, I'll be dumping tens of thousands of more. This past 2 weeks has been an absolutely crazy period in terms of market volatility. I mean, we already know everything about the Strait of Hormuz with oil prices going on. And most people would think I'm crazy of how risky everything is, and I'm dumping into these assets. But this past 2 weeks has taught me a lot. I want to share that in this video for everyone, especially if you're in your 20s. So let's get right into it. I'll be honest with you, I was totally convinced, if you asked me a week ago, 2 weeks ago, that the market was going to crash. I fell for the social media hype on X and all the news around the Strait of Hormuz about oil prices going up and how it was choking everything. And I got cash ready thinking a downturn was going to happen. Instead, of course, everything is rallying right now. And even though this might even be a short-lived period on the longer time scheme, it has taught me a lot. So why would I dump into the market now? And I just want to go over my thinking. Firstly, I want to make this clear. It's by far the biggest lesson I've learned over these last 2 weeks. And I want to scream it so everyone can hear it. You cannot pick and you cannot time the market. The amount of noise everywhere from people on trading apps, on social media, on X, saying the market is collapsing, interest rates going up, inflation. You hear all this news everywhere. And it's a lot of noise and it can be really distracting as an investor. And I feel like sometimes that's because, I work at home, I'm building data systems at home. And sometimes, while I'm at home, I'll check on my investments and see how everything's going on. And I'll see everything in the red. And I'll see oil prices shooting up to $115. And you start to think, shit, this might finally be it. This might be the moment. And it can be really scary. But the market, honestly, it's like the tides of the sea. It comes and it goes up and it goes down. And sometimes it has some waves that crash in, but honestly, that's just how it goes. You can predict it somewhat, but to the exact day, to the exact week, it's nearly impossible. And for those guys, I know who you are. You're staring at your screens and you're trying to do technical analysis like traders. You're trying to see the double tops in the market and all that. I want to just say this. If you really think you can outsmart Wall Street and the biggest institutions in the world, you got another thing coming and you just need to have a reality check. The other thing, the biggest lesson I've learned is the same thing that I'm going to be saying on this channel over and over again. Time is your biggest asset. As a 24-year-old, I know time is my biggest asset and my investments have a lot of runway to grow. If you're in your 20s, it's the same thing. And this money I'm putting away, honestly, I don't think I'll be needing it in 20 or 30 years from now. Like 20, 30 years from now, I'll be 45 years old, maybe 50 years old. I think I'll still be okay by then. Therefore, it got me thinking, and I want to be honest with you. Do you think in 20 to 30 years from now, the assets will be going up or down that you're investing in? Think about it. Like gold and silver, tech stocks, Bitcoin. 20 to 30 years from now, where do you think their prices are going to be? So when you start thinking in that time horizon, honestly, it changes your perspective a bit because it's easy for me to check my portfolio and, you see everything in the red. But as real sound investors, as people who are in this for the long-term game, just to build real wealth and just to have something by the time we're a bit older and be able to enjoy our retirement, you just got to think on a longer timeline. When you look at it this way, all the volatility and all the news that's going on, it's just a lot of noise. And we need to learn how to be able to invest while managing our emotions, to be a bit more stoic and cold, despite everything that's going on right now. And when markets are red and fear sets in, your portfolio gets absolutely slammed. And, when it's green, sometimes I have a lot of FOMO and I think, man, I want more of these assets that are going up right now. And you can't let the emotions dictate your decisions anymore. And that's my big lesson. But here's the reality, guys. Some things aren't going to change. These are the fundamentals. And the fundamentals are going to be what stays the same in the long term when you're investing. And that's this. The money printers are going to keep going. We're going to continue printing more and more money. Cash is going to continue losing value day after day. And if you aren't invested, you're losing in the long run. Unfortunately, this is the world we live in, and that's the way it's going to go. The other critical point, and I say this a lot on this channel, is that a dollar invested in your 20s is a lot more valuable than a dollar invested in your 30s or 40s. And that's simply the concept of compound interest. I recommend everyone just go online quick and just look up a compound interest calculator and just see at your age, how much is your money going to be growing over a long period of time. And I want you to look at the effect that 20 years, 30 years has on investing and how much your investments are going to continue to skyrocket. And when you look at it that way, it's really the time that you're in the market that will guarantee you win. When you're in the market for long periods of time, that essentially guarantees that you're going to win. It's not timing the market. It's a well-known fact. You can look at it up. I'm going to put on the screen now. Dollar cost averaging is the best way to invest. Just continuing to put a little bit of money every month, every week, whatever you can afford. Just be smart and continue to grow your pile over a long period of time. And speaking of which, I really think accumulating is really important, and accumulating as much as you can of your favorite assets and just getting it as much as you can. Really focusing on as many ounces of silver as you can get, as many shares of index funds, and as many sats of Bitcoin as you can get. Because at the end of the day, 40, 50 years down the line, you're going to look at your portfolio and you're going to think, it's not about how many dollars in there. It's about how many stocks I've got. It's about how many ounces I've got. That's what really matters. And maybe these assets do go down rapidly. Maybe tomorrow it goes down 30% on new news. But they could just as easily go up. And as mentioned before, no one really knows. And that is the fun of it all. That's what makes investing so good. But the way I look at it, it's like this. Every dollar you invest is like an employee working for you. It's someone that's doing a bit more work for you. And if you have $1 sent out, that's an extra worker that's been put in your business and is expanding. And you want to basically have as many of these employees working for you over time. I've also improved my psychology around red days. We mentioned that a bit more, but when things go down and things drop, it's easier to say when it's a red day and when assets go down in price that you're buying them on the cheap, buying them on the dip. But when fear sets in and when your emotion sometimes takes over, that's when you make really stupid decisions. And from now on, when red days come along, I'm just going to see it simply as a discount. It's like going to your favorite store. Imagine going to your favorite shoe shop or watch store or wherever you think about going and seeing a 30% discount. Do you run away? Do you, turn the other way? For some reason, there's a really funny thing now in the stock market and in investing. When we see these downturns, that's when people get really nervous. But honestly, that's where the biggest wins happen. Over and over again, it's when things go down and when fear sets in the market, that's where the biggest wins are made. And this is something I'm continuing to improve on, my psychology in this, and just continuing to understand what's happening in the market on a macro level, and just understanding that if I have trust in these assets, I've studied these assets, and I've got a crap ton of knowledge in them, then I can back it in. If you've got knowledge and you've done research in what you invest in, then the chances of you selling or being scared go down massively. And speaking of which, this is a perfect time to talk about why I'm buying Bitcoin and why I'm buying into the QQQM. I want to go into that a bit more. So firstly, the QQQM, which is basically the Nasdaq in an ETF form. It gives me exposure to the tech sector, which I continue to see in the long term be where the future is moving. AI continues to show growth, especially in my work, and I continue to see it being needed more and more. I mean, it's the first time in history we're seeing a situation where the S&P 500 is rising and it's no longer correlated with job openings. We live in a world now where you don't necessarily need to have employees to have a growing business. And this is a very unique time right now. And I'm getting exposure to companies like Apple, like Microsoft, Nvidia, Amazon, Tesla, which I think 20 years down the line are still going to be dominating. These are companies that are driving the global economy right now and almost carrying the economy at this point. I mean, if you look at the S&P 500 right now, it's going up. But if you get the S&P 500 on an equally weighted level and all these 500 companies actually put in equal shares, right now it's actually going sideways. So it's a really interesting period right now, and these top companies are moving everything along right now. And 100%, there's a part of me right now that 200% accepts we are in an AI bubble, and there's a lot of companies that are massively overvalued that aren't even considered profitable. That's a fact. But the reality is, these companies, we're talking 20 to 30 years down the line. Do you think they're still going to be around? I really do think that these companies are still going to be in it for the long haul. And that's my investing position from here on out. So the reason why I like the Triple QM, going into more detail, is a few reasons. Firstly, it protects me from single stock risk. So you basically have a basket of goods and you're betting on the technology ecosystem to continue to grow. But it means that, if something stupid happens, and if you own a single stock like Tesla, and you hear news in the media of Elon Musk, maybe he got into some kind of incident. There's plenty happening in politics right now, and news spreads quickly. It can cause stocks to tank, and it can cause things to get funny. I don't want to get involved in that, and I want to stay out of that risk. So by holding this basket, it basically means I am betting on a whole sector, not a single stock. Specifically, the Triple QM, or what it's called the Invesco Nasdaq 100 ETF. It's specifically designed for long-term holdings, which, as mentioned, that's my game plan going forward. They charge less fees and they don't trade as much as the normal Triple Q, which everyone loves. It's considered the golden tier of tech investing. But basically, it's designed for long-term buy and hold investors because of a few reasons. Firstly, compared to Triple Q, it has about 25% less fees, which will, compound in the long term. And it still has the same identical holdings. It also has slightly more dividends, which helps in compounding. But honestly, it doesn't matter that much. The dividend element doesn't matter much there. This asset is basically the ultimate buy and hold strategy and something I'm doing for the long run. And despite the AI bubble, I continue to buy into this slowly. And I have this as a smaller part of my portfolio right now, but I'm definitely continuing to expand in this area and I'll be buying plenty of it this year. While Bitcoin, it's the ultimate growth asset. It solves so many of the world's problems and is such an amazing asset. And it's something which I just truly believe in. In a world where we continue to print crap loads of money, that 21 million cap is something extremely special. We're now starting to see the value of it on a global level. Institutions and nations are now beginning to use it. I mean, we're seeing what's happening right now at the Strait of Hormuz. There's potential talks that even Iran has been using it. But the fact is, whether that's true or whether that's not, I believe and I know the US is going to continue to devalue its dollar and it'll continue to pay the price through high amounts of inflation. The reality is when a country has a debt to GDP ratio of 120% plus, the best way to deal with debt when you're past the point of no return and there's no way to fix it, you're bankrupt at that point. The best way to deal with it is to devalue the debt. We saw this in the Plaza Accord in 1985, and again with the Mar-a-Lago Accord, which is basically focused on improved trade, but what it's really about, it's about devaluing the dollar. And when the dollar gets devalued, that's where people's savings get destroyed. That's where things just get nasty, and the hard work that people are doing just basically gets wiped. The other thing is, and we're seeing it holding up a lot better, Bitcoin, when markets are going funny, it's decentralizing a bit more from classic tech stocks and where that's going. And it's something which I really like to see. It held up really well during the Strait of Hormuz period, and it's been a really interesting thing to see. But now I'm in a position where basically my portfolio is covering myself in many directions. I've got, if the markets go down and money printing begins, then I've got myself covered through silver and Bitcoin, as well as I've just got a bit of cash on the side, about 10% if I want to buy some more discounts. As markets continue to run, and in the long term, I know tech where it's going to go, I've now got the Triple QM, and that's why I just love it so much. So in terms of moving forward and what my goal is this year, the goal for this year is to have 100K invested in the markets. And I guess for me, this depends on how the market moves. If it goes up a lot more, that's going to make it a bit more easy. And if there's some kind of crash that happens this year or in the future, I don't know, that might make it a lot harder, but that's neither here nor there. But either way, I'm going to continue to DCA into these core assets, and it's what I'm going to continue to focus on. Just as well as that, being able to increase my income and be able to build my skills and be able to potentially build a business. I think it's critical that despite everything that's happening in the market and with all these investments, it's really important that you also focus on yourself. So a reminder to everyone, investing is cool and everything, but you are the most important asset. And that's the thing that matters the most. You need to have an active income, which is fueling these assets that you're investing into. So I'll continue to update you on what I'm doing and my learnings. I think this experience has been so fun, just seeing how the market's going up and down right now. And it's definitely been interesting, and it's something that I've really enjoyed documenting. I hope this video provided value to you guys. Maybe I've kind of opened up a few ideas for you guys, but the biggest lesson without a doubt is despite all this volatility, I continue to dollar cost average, and it's going to be the way I go from here on out. I'm sick and tired of all the news and everything going on right now. I'm just in it for the long run from here on out. Like, if it goes down, it goes down. If it goes up, it goes up. I'm just investing in what I believe in and what I think is going up 20 to 30 years down the line. And that's my strategy from here on out. Hope you enjoyed this video. Hope it provided you some value, and can't wait to see you in another video.